I get the permission, I will be able to, yes, sir, just now I got, so I will be sharing it. Sharing the screen, you can just see.
Okay, ma'am. Thank you so much.
Okay.
A small request from my side, ma'am.
Yes.
Would it be possible from your end to share any important questions for this subject?
Sorry, sir.
Ma'am, would it be possible from your end to share an important questions after your session?
Yeah, surely tomorrow I will do, sir.
Okay, ma'am. Thank you so much.
Okay. So now I think this screen is visible.
Yes, madam. Yes. Yeah.
So here we are. So we are discussing the duties of the directors. So as I said, everything he should do in accordance with the articles, then whatever action he is going to take, it should be in the good faith. He has to protect the interests of the company as well as he has to protect the interests of the stakeholders also. And then whenever he is going to take up any task, at that time he has to see to it that he is going to take the reasonable care and skill. So if when we are taking up any personal thing for us, then how much care we are going to take, in the same manner the director is also entitled to act. He has to think, he has to take the responsibility for the company, and then he should not be involved in any situation wherein it is going to give any conflict to our company, or it is going to affect the interest of the company or the stakeholders also. So that vigilance he has to maintain, and then he should not think of taking any undue gain or advantage from the company. So whatever is the company's money, that should be utilized for the purpose of the company and for the promotion of the company only. He should not take the advantage of that. He should not take any money or any other favor from the company also. And if he is found guilty, then he will be liable for the consequences. And he should not be assigning his office to any other person. Whatever are his duties, only he is accomplished to complete them. And then in his absence, if he wants to give his duties, then that should be with the resolutions passed. He should not be assigning his duties or his acts to somebody else in the company. So these are the various duties, and if he is found guilty, then the fine would be not less than 1 lakh, and then it maximum fine would be levied up to 5 lakh rupees also. Then next one, director's report. So this report is basically prepared by the director, and then he has to highlight all the important information that is related to the organization. And this is considered to be very important report also. So all the registered companies, whenever they are going to conduct the annual general meeting and when they are going to file the company returns, then it should be done in accordance with the guidelines given by the Ministry of Corporate Affairs. And then it has given the various instructions how we have to file our reporting and what all the companies has to include as a part of the corporate governance system. And in the director's report, what are the mandatory things that should be included from the side of the organization? So first thing is financial summary and highlights. So what is your status of your organization? So how far your organization is doing well, how much finances are there with you, and apart from the financial summary, there are certain aspects which need to be covered. So that comes under as the macroeconomic, geopolitical, financial, and industrial aspects also. So in the first or second classes we have discussed, like whenever one company has been set up, it will have internal environment and external environment, isn't it? So internal environment will constitute all the people who are related with the company internally, and external will be having all these factors like whoever are outside the purview of the organization. So whenever there is any political disturbance or any other problem that is encountered with the company, that will in turn have an impact on the organization organization also. So we have to disclose what are the major impacts that are going to be there apart from the financial summary also. These are the factors which can have any impact on the organization. So all these also need to be disclosed when we are going to give our report. And the next one is with respect to the amount. So if at all from our company, if we are going to transfer any amount to any of the reserves, so how much amount we are going to transfer? And if we are not proposing any transfers, then why we are not transferring to that reserve? That reason also should be specified. Like we have so many provisions and then we maintain so many reserves, isn't it? So why we are transferring or why not we are transferring? That definitely should be specified. And then these are the things which are related with the dividends. So when the company is going to declare any dividend at the time in the dividend policy or in the matters of the dividend, what all will be the compulsory disclosures? So the first thing that they have to disclose is the amount of dividend. So how much dividend is being declared for that year, and then what is the amount of tax that you are left with after the distribution of the dividend. That also should be there in the report. And then next one is interim dividend declared. So interim you might be knowing, so that is in between. So whenever we are going to declare the dividends after 6 months, instead of going for an annual dividend, if we are going to declare the dividend early within 6 months of the financial year only, then it would be called as an interim dividend. So when we are going to declare any interim dividends also, how much percentage we are going to declare it as a part of the interim dividend? So apart from annual, we are going to declare it in between also. And then what would be the tax implications on that? After you declare your interim dividend, how much amounts are there for the distribution and how much amounts you are going to pay to the taxes also? That also disclosed in this report. And then next one is the total amount of the dividend for the year. So overall, for your shareholders, how much is the total amount that you have declared? So it comprises of the year-end dividend that you are going to disclose, that you are going to declare, as well as if any interim dividends has been declared, then that amount also should be there in your director's report. Then a statement of compliance with the dividend distribution policy. So if the company is going to follow any dividend distribution policy, then whether it is going to follow all the guidelines issued by the dividend distribution policy or not, that information also should be disclosed. So basically the SEBI, Securities Exchange Board of India, in its notification that is on 8th July 2016, it has given a ruling like all the companies, whichever are the top 500 companies, they need to formulate this dividend distribution policy. So under this policy, we are given the following guidelines, like all these companies has to follow this one. So first thing is, if the company is a listed company, then in what circumstances it is going to either declare the dividend or it is not going to declare the dividend. So basically, when do we declare the dividend? Whenever we are getting our returns, when the entity is making profits, then generally we declare the dividends, isn't it? So in certain exceptional cases wherein the company is not having good finances, then only we generally postpone the dividend, or for that particular year we may not be declaring the dividend also. So first thing that we have to give under the dividend distribution policy is the reason why we are asking the shareholders that they can expect the dividend, that we are going to declare the dividend, or what is the situation that is making the entity not to declare any dividend also. That should be given, that information should be given. And then when the company is actually when the company is declaring dividends for the shareholders, then at the time, what all financial parameters the company has kept in mind, and after that, how much dividend has been declared. Then next one is internal and external factors that has been considered for the declaration of dividend. So as I said, internally, if there is any disturbance, or externally, if there is any disturbance to the company, then the declaration of the dividend would be suffering. So what are the factors that are there? That also should be there. And then next comes, so next is the retained earnings. So retained earnings are basically for your company, how much is the total accumulated net income that is existing with your organization. That would be the general meaning of the retained earnings. So if at all in your from your company, if for the declaration of the dividend, if you are using the already existing income, then how much amount you are using for that, and whether your policy is for using the retained earnings or not, that also need to be disclosed. And then next one is the various parameters that has been adopted with regard to various classes of shares. So whenever we have different classes of shares, like we have share equity, preference and all, so at the time what all things the company has kept in mind and how it has declared the dividend. And next one is payment of dividend from the reserve. So if the company is going to declare, or when the company is going to make the payment of the dividend to its shareholders from the free reserves, then also the report should be including the information why we are actually using the reserves and why not our profit. That information should be readily available. And apart from these dividends, the other things which we are going to cover in this report are the major events that has happened during this particular financial year. So under that, we have first one is the state of company's affairs. So under that, various points or various explanations need to be given. First one is segment-wise position of the business and its operations. So if at all your organization is being divided into various segments, and like that, if you are operating, then that entire information should be disclosed. And if there is any change in the status of the company, like earlier you are a private limited company, now you have transformed your company into a public limited company. So why there is a change in the status of your organization, that also should be informed. And next one is key business development. So what are the major developments that has been taking place in this year, and whether these developments are being useful for the organization or not. And next one is the change in the financial year, whenever we are going to change. And next is capital expenditure program. So what all programs the company has initiated with respect to the capital expenditure. And in case if the company has indulged itself in any of these, like if the company is going to acquire, or if it is going to merge, if it is going to diversify or expand, then also we have to list out in our director's report. Then if the acquisition is an ongoing process, like already you have started with the process of the acquisition, then that acquisition process should be informed, and various developments with respect to the organization. And if at all our intellectual property rights have been assigned to any other company, then that fact also should be given. And lastly, any material event having an impact on the affairs of the company. Material event is any event that is going to happen, and that is very important for the organization, and it comprises of money also. So whenever money is involved and the event is important, then we generally call it as a material event. So if any such kind of an event has happened and which is going to affect the company, all those details should be given. Next one is change in the nature of the business. So whenever the business is going to change, the nature of the business is going to change. That means the business enterprise is existing, but now either there is a merger, there is an acquisition. So any kind of things like this is going to happen, or if the business enterprise is going to be discontinued, then the reasons for that and the details of the same should be disclosed. Next one, material changes. So just now I said, no, material changes are any important changes that are going to happen in the organization with respect to money, and which has a weightage on the organization. All that would be called as material aspects or material changes. And commitments could be any guarantee that your company is giving for any other organization, or any legal involvement that the company has indulged in, that would become the commitment of the organization. So all these information also should be disclosed. And then last one is details of the revision of the financial statement or report. So in case if our financial statements have been revised, and now we are going to give the new financial statement, then also we have to inform why we are revising our financial statement. So revising financial statements means originally in the starting only we had our original financial statements, but because of some reason that financial statements we are removing, and now we are either giving the updated financial statements or a new financial statement, then that would be called as a revision of the financial statement. So in what consequences actually we are going for the revision of the financial statement, that reason should be disclosed. Then next one, general information. So an complete overview of the organization during the last year. And next is external environment and economic outlook. So how the external environment has actually helped the company. So under external environment, we have this political, then policies, strategies, then suppliers, all these people. So how that environment has affected our organization, and economic outlook. So from our company's side, what are the parameters that are changing with respect to the monetary things? That information. Next one is induction of strategic and financial partners during the year. So if at all we have, our company is now associated with any new partners, so it could be financial partner or any other partner, then what are the additions that has been made? And lastly, if the company has delisted its equity shares, that means from the stock exchange till now those shares were listed on the stock exchange, now we have removed the equity shares from the stock exchanges. So why we have delisted our equity, that reason should be given, and the details of the prices that we are going to offer, that also should be given as a part of the general information. The next one is with respect to the capital and the debt structure. So how much capital we have and how much debt we have raised. So in a company, these are the following matters which need to be disclosed. So first one is if any change in the authorized capital or issued capital, subscribed or paid up capital. So any changes in these four types of the share capital, if the company is going to have, that how much change they have been bought in, that amount should be mentioned. Then next one is reclassification or subdivision of authorized capital. So authorized capital all must be knowing. So how much the company is authorized to raise. So that again, if we are going to reclassify or we have made any subdivision of that, so that amounts also should be specified. Next one is reduction of the share capital. So initially from 100 crores, we have reduced our share capital to 90 crores. So why we have reduced, or buyback of the shares. When the company has initially issued, but later on it has bought back its shares, then that amount also should be disclosed. And the next one is change in the capital structure. So other day also we have discussed, so restructuring is whenever we are going for any internal restructuring or external restructuring. So it is like your internal and external reconstruction. So either by the way of internal would be by changing your shares structure. That would be internal, and external is by your assets and all. Whenever we are going to change, that would be your external restructuring. So whenever we are going to change the structure, capital structuring, then how much we are changing, how much variance is coming, that also should be informed. And change in the voting rights. So earlier your shares are carrying each share one voting right. Now you are going to give each vote, each share two voting rights. So like that, whenever the voting rights are also changing, that information also should be given. And next is with respect to the issue of shares or other the convertible securities. So from our company, if we are going to have any of this, then that information. So under that, we have to disclose the following. So first thing is date of issue and allotment of the shares. So when we have issued and how many has been allotted, that should be disclosed. And the next one is method of allotment. So what is the method that we are going to follow for this allotment of the shares? That also should be disclosed. So QIP is qualified institutional placements. If you want, you can write it there. So QIP stands for qualified institutional placements. So that would be generally whenever one listed company wanted to issue any equity shares, and if it is going to issue any equity, they are going to give the shareholders an option that they can change from the equity to the debentures or to any other form of shares. Then that would be issued, that would be called as a QIP, that is qualified institutional placement. And the next is follow on public offering. FPO stands for follow on public offering. So that is whenever we are going to give any additional shares, when we are going to issue any additional shares for the already listed shares on the stock exchange, then it would be called as the follow on public offering. And ADRs and GDRs you might be knowing, that is American Depository Receipt and Global Depository Receipt. Rights, bonus issue, all these, I think you people are familiar with this. So whenever we are going to allot any of this, then what is the method that we are going to adopt? That should be intimated. Then next is the issue price. So for how much price we are going to issue, and then conversion price. So just now I said, no, when we are going to get an option from an equity, if at all I am going to change it to preference, or from my debenture I am going to change it into an equity, then what is the price for the conversion that the company is going to quote? That would be the conversion price. So that also should be mentioned. And the next one is number of shares that are going to be allotted to all the shareholders. That number of shares should be given. And then number of shares or securities that has been allotted to the promoters group. So how much amount has been allotted to them, that also should be disclosed. And next one is whenever the company is going to consider the shares or securities other than cash. So when we are going to issue it for in kind, then what is the thing that we are going to take and what will be the registered value? What is the registered valuer report on that? That also should be disclosed as a part of this. The next one is with respect to the issue of equity shares with differential rights. So the differential rights itself mean like we are going to have some extra rights, we are going to give some extra rights to the shareholders, isn't it? So whenever we are going to issue any differential rights, like some shareholders are going to have some differential rights that are being allotted, or some extra rights that are being allotted, then it would be called as the differential rights. So whenever the company is indulging in this form of equity shares, then what all disclosures are mandatory? So first thing is total number of shares allotted with the differential rights. So as I said, how many shares the company is going to allot to the shareholders, and for which shares you are going to give the extra right to the shareholders. That one should be disclosed. And then if we are allotting like that, any extra rights are given, then what are those extra rights pertaining to? So is it pertaining to the voting rights, or is it with respect to the dividend? That also need to be given. And next one is the percentage of shares with differential rights to the total issue of the equity shares. So in the total of the equity shares, how many shares are there which are going to have the differential rights? So from my company, if I have issued 100 equity shares, in that 100 equity shares to some 20 shareholders, to some 20 shareholders, I am going to give 30 shares with the differential rights. Then what is the ratio that it is coming out? That should be informed. Then next one is price at which the shares are given with the differential rights. So what if a normal share is going to have 10 rupees and if they are going to have a differential, right? Is the price same or is the price varying? So if at all you are going to issue it at 12 rupees, that amount also should be mentioned. Next one is particulars of the promoters, directors or key managerial personnel to whom these differential rights shares have been issued. That details should be disclosed. And next one, if there is any change in the control of the organization. So whenever from the issue of the shares, whoever are holding this differential voting rights, because of that also if there is any change in the company management or in the change in the control of the company, that fact also should be informed. And then next one is with respect to the diluted earnings. So if the company is going to have any diluted earnings, so diluted earnings also almost say same. So whenever we are going to have any earnings per the share, how much earning we are going to get it for our share, and when we are actually converting our share from one form to another form, how much amount we are going to get it. That would be called as the diluted earnings. So if at all the company is going to have any diluted earnings also, then that information also should be disclosed. But whenever we are disclosing like that, we have to see to it that when we are giving them the right of conversion, so when the shareholders are going to exercise this option of conversion of one kind of shares to another kind, then at the time we have to see to it that it is not going to exceed the days of 30 days. And when the valuer is going to mention us with the valuation report, within 60 days, the entire convertible securities should be done. So the entire process should be taking up within this number of days only. So within 60 days, the conversion should be taking place in the organization. And the last one is pre and post issue shareholding. So originally, how much shareholding was there, and later on, how much shareholding was there with the voting rights. That also should be given in the report. And next one is sweat equity shares. So sweat equity shares are basically the shares which has been issued by the company generally to the employees for the hard work which they are taking in the organization. So that would be called as the sweat equity shares. So when the company is going to issue any sweat equity shares, then these are the following disclosures. So if at all it is going to issue either to the employees or to the directors, then how many shares were issued to them, that number should be mentioned, and the class of shares that has been issued as the sweat equity shares, that also should be informed, that also should be reported. And the next one is number of shares, number of sweat equity shares that has been issued to the directors, to the key management personnel, or to the other employees. So we have to bifurcate them. So if at all we are going to give 10 sweat equity shares to the directors, 20 to the key management personnel, and 100 to the employees. So all these three categories should be shown separately, and their names and their allotment in the cash also should be mentioned. And next one is reasons or justification for the issue. So on what basis we have identified them and why we have given them these sweat equity shares, that reason should be informed, and the various terms and conditions for the issue, that also should be informed in this report. Next one is the total number of shares arising out of this sweat equity shares also, that information, and percentage of sweat equity shares to the total post issued and paid up share capital. So if at all we are again having 100 shares, in that 100 shares, 20 shares we are allotting in the form of a sweat equity share. So to the total number of shares, how many shares we are allotting in the form of sweat equity shares to our entire total paid up share capital. That information also should be compulsorily there. And then if at all the company is going to accept any consideration other than cash, so when we are going to accept in kind, so then how much is the benefit received, that also should be informed. And then last one is diluted earnings. So whenever we are going to earn anything because of the conversion, then how much is that amount that we are going to earn, that details also should be there. Next one is employees stock options. So employee stock option is basically whenever the company is going to give the employees an option to own the shares of the company, then that would become the employees stock option. So with respect to this, the following are going to be disclosed. So first one is the various options granted to them. So what all options they can pick, like from the equity, from the preference, from the debentures, what the employees are actually picking up. So that options which the company has provided so that the employees can take as an option, that should be given. Then options vested. So what all options has been vested upon the employees, and options exercised. That means what all the employees have taken. All these details. And then next one is total number of shares. So how many shares have been allotted from the side of the company to the employees as a part of the stock option. Then options lapsed. So the company has given an offer, but then they did not exercise. So that's why there is a lapse in that offer. So that also need to be given. And the exercise price, how much price the company is going to quote, and variation in the terms of options. So any changes that are going to take place, and then the money realized from the exercise of the option. So how much the company has received, and total number of options in force. That means what all options have been given to the employees, that also. And the next is again same, almost similar point like earlier one, employee wise details. So how many shares have been given to the key management personnel or to the employee? How many for each class of these people during that particular financial year? That also should be disclosed in the report. And if in case if the company is a listed company, then at that time the following details also should be mentioned. So the shares held in trust for the benefit of the employees. So whenever certain shares are being held in the form of a trust, then at the time for those shares the voting rights are also given, but they are not directly exercised by the employees. Then in such case of shares, the following disclosures need to be made. First thing is the names of the employees who did not exercise any voting right directly. So even though you have the shares, the employees did not exercise the voting rights. Instead of they exercising the rights directly, they have taken an indirect way. Then reasons for not voting directly. So what are the reasons why they did not directly involve in this voting? That reason, and the name of the person who is exercising such vote. So why he did not take up the voting directly, the name of that person should be mentioned, and number of shares held by or in favor of such employees. So what is the total number of shares that have been held like that, and how many are those shares with respect to the total number of shares again. That calculation also should be given. And when is the date of the general meeting when this voting power was exercised indirectly, and what all resolutions have been passed in the general meeting, and what is the percentage of such voting to the total voting also. And lastly, whether there are any arguments, whether there are any votes that are in favor or against of that resolution that has been passed by the company. Then next, now coming to the issue of debentures, bonds and non-convertible security. So here we will not be given an option to convert our security into any other form. So now under these cases, first thing is the date of issue and allotment of securities. So when was the issue and how many securities were allotted? And next is the number of securities. Then next one, whether we are following the way of preferential allotment or private placement or public issue. What is the method that has been followed by the organization? And next one is the various details of the debt reconstruction that is taking place in the organization. So that details also should be given. So basically debt reconstruction is when they are given an option that our debt instruments can be exchanged with an equity. That would be the general meaning of debt reconstruction. Or in other cases, we can just ask our creditor to reduce the total number of interest that we are going to pay, so that the burden on the organization is going to be reduced. So if at all we are going to pursue any of the things like this, then that details also should be given. Next one is the issue price. So for how much it is being issued, and then the coupon rate is generally how much interest we are going to be pay on the bond. That would be called as the coupon rate. Maturity date, when our security is going to be matured, and then what is the total amount that we are going to raise out of these funds. So all these details. Now, issue of the warrant. So in case of any warrants, like any share warrants like that, what all should be given. So again, same, the date of issue, when we are actually issuing and when we are allotting these warrants, that should be given. And the next one is number of warrants. So how many number of warrants are going from the side of the company, and whether these are by the way of preferential allotment, private placement, or the public issue. Again, similar point like the other one. That also need to be mentioned. What is the issue price, how much price you are issuing, and what will be the general maturity date, and what is the amount that is going to be raised from this issue of warrants, and what all terms and conditions we are going to have when we are going to use the conversion. All these should be given. And next is credit rating of the securities. So in case we are going for any credit rating, so what is general meaning of credit rating is like how our performance is going to be assessed. In the same manner, the company's performance will also be assessed, isn't it? So depending upon the performance of the company, we are going to give them the rating. So some companies will get 5-star, some will get 3-star, 1-star, like that. So we have specific agencies or organizations which are going to rate the companies also. So depending upon the rating that we are going to obtain for our company, our securities value will also be changing. So when we are going to have any credit rating of our securities, basically when we are going for the rating of our securities, then in that aspect, what all should be disclosed. So first thing is, what is the credit rating for our security? So how much rating we have received, then the name of the credit rating agency. So what is the organization that has given? So you might be knowing CRISIL is one of the agencies which generally gave. So like that, we are having various other credit rating agencies also. So their work is to rate the organizations depending upon the performance and other parameters. So they check them and then they rate them. So name of that agency should be given, and then the date on which the rating has been given. So suppose for your company, if you have received a 5-star rating on 22nd of May, so that date should be mentioned, and then revision of the credit rating. So from A to A plus you have changed. Then when that revision has been taking place, and then if from A the rating has come to C, what are the reasons why there was a downward revision in the credit rating? That detail also should be given. Then next one is the Investor Education and Protection Fund. So this is one fund which is being given by the Ministry of Corporate Affairs. So generally we have certain shares transferred into this fund. So basically when this would be transferred is whenever one shareholder, he is not operating his account for more than 7 years. And like how for our banking, what should I say? For our bank accounts, if we are not operating for more than 3 years or something like that, there are absolutely no transactions that are taking place, then that our account will become dormant account, isn't it? So in the same manner, whenever we have our the securities account, but still we are not operating them, and there is certain fund in our securities account then at the time, basically all those unutilized or unpaid dividends or unclaimed amounts, all that will be transferred to this fund basically. So this is one important concept. So Investor Education and Protection Fund. So if the company is going to transfer anything to this fund, then at that time, what all disclosures need to be done? So first thing is the various disclosures for this is various transfers that are going to be done into this fund. So how much is the amount of unclaimed or unpaid dividend? So just now I said no, whenever they are not making any transactions from their account, then how much amount is being retained in that account? All that will be transferred to that Investor Education and Protection Fund. So that is under MCA, Ministry of Corporate Affairs only. So how much amount that is flowing from our company into this fund? That details we have to mention. The next one is any redemption amount of the preference shares. So from the preference shares, how much amount we are going to receive, that clarification should be there. And any amount of matured deposits. So matured deposits are there for the companies, and those are other than the banking company. So any other company which is not a banking company and they are having certain matured deposits, and on those deposits interest also has been received by them. But still, as I said, they are not going to, nobody has actually utilized that. So that also would be transferred into this fund. And any amount of matured debentures along with the interest and any application money received for any securities or any refund that has been initiated along with the interest, then that amount also need to be disclosed. And the next one is any sale proceedings of the fractional shares. So fractional shares are basically in one total share when you are going to have a fraction, when you are going to have a lesser percentage of share, then basically it will be called as a fraction share. So when it is actually less than one full share, then we can call it as a fractional share. So if at all we are having any fractional shares like that, and which are going to arise because of the issue of any bonus shares or because of any mergers or amalgamations, then in that cases also we need to disclose that amount. And next is any resulting benefit, any benefit that we are going to get out of the shares which have been already transferred to this Investor Education and Protection Fund. And lastly, and next one is year-wise amount of unpaid or unclaimed dividend. So as I said, generally this fund comprises of whenever they are not claiming the amount and it is still lying in their account, then only those amounts are going to be transferred into this IEPF. So when we are actually transferring, how much amount is lying like that? Let it be, it is going to be an unpaid dividend or an unclaimed dividend. How much amount we are going to pay, that date and that amount should be mentioned. And next is any donation if we are going to make with respect to the company, that amount. And then last one, any such amounts that has been transferred from the side of the company to IEPF account. So what is the total amount that has been transferred during this particular financial year? So all these are the various details that need to be disclosed. So this is this director's report is little bit technical as well as important also. Then next, moving ahead, we have independent directors, their role and responsibilities. So in the earlier class, we have already discussed the independent director, isn't it? So who will be an independent director? The person who is working in the organization, but he do not have any influence of others. So whenever he is going to take any decision, he is going to take it in an independent manner. And his decisions always, they are striving towards the welfare of the organization as well as for the protection of the stakeholders. Then that person would be called as an independent director. So basically why we have to emphasize on these independent directors is, so in the year of 1950s, in the years 1950s, there was a lot of problem that USA has faced because of the directors. So nobody was actually taking the responsibility, and because of that, so many frauds were happening in the organizations. So that's why the US laws have thought that whenever there are any directors that are associated with the organization, they should be given independence. They should not be under the influence of anyone. Then only whatever decisions they are taking, that would be with respect to the company. So that's why these laws have been made, and mostly the Sarbanes-Oxley Act of 2000, that is an important ruling that has come up with respect to the independent directors. So these acts we have studied in the earlier classes. Various committees and acts we have studied. No, this is Sarbanes-Oxley Act. This is one of them. Then next, coming to our Indian scenario, so the origin of these independent directors has been coming from the various recommendations of the various committees which have been appointed by SEBI, and various reports which we have studied in the earlier classes. There also we have discussed the importance of independent directors. So all these committees which have been drafted, they also emphasized on independent directors, their working. So Kumar Mangalam Birla report, Narayan Murthy report, and then Naresh Chandra report. So all these have said that in an organization, independent directors should be there, and they should be, in true sense, they should be independent also. And clause 49 of SEBI, so that also deals with the independent directors only. So in the last 3-4 classes, we have got this clause 49 under SEBI. So that clause 49 deals with the independent directors only. So now various clauses have been included as per our Companies Act 2013 with respect to the independent directors. So we will see them. So first thing it says, like whenever it is a public limited company, in your total number of directors, at least 1/3 of them should be independent directors. So if our board is going to comprise of 15 directors, in that 15 directors, minimum 1/3 people should be independent directors only, and remaining people will be executive and non-executive directors, isn't it? And then apart from that, if the central government is going to prescribe any minimum number of independent directors for the public limited company, then also we have to fulfill that condition. That is the first one. And then next one is that basically the definition of the independent director. So the independent director would be any director who is other than the managing director or the whole-time director or a nominee director. That's what the definition says. And then apart from that, who is a person of integrity and possess relevant expertise. So that person should be having enough knowledge and enough expertise so that he can take the company ahead. And then he should not be a promoter of the company, or he should not be any person who is associated with either the holding company, subsidiary company, or associate company also. Only that kind of a person we can choose. And he should not be related with the promoters or directors of the companies also. And again, same criteria, he should not be related to the holding, subsidiary, or associate company. And next it says, like that person who wants to become the independent director, he should not have any peninsulary relationship with the company. Again, same. So why we are keeping him in the outer purview is, if at all, again, if he is going to have any sort of a relationship with either the holding company or subsidiary company, again, in the true sense, he will not be an independent person. Again, his decisions will be influential. So that's why we want any person who is away from all these things. So he should not be any part of the holding company, subsidiary company, or associate company, nor he should be related with any promoters or directors also in the preceding financial years, immediately in the preceding 2 financial years, on the present current financial year also, nowhere there should be any sort of a relationship that is existing. And the next is, none of his relatives should be there. So any relatives are there in the existing company, then also that person cannot become the independent director. We cannot give him the status of independent director. Okay. So again, same rule. So relatives should not be there, and they should not be associated with any holding, subsidiary, or associate company, nor he should be associated with the promoters or directors. And whenever the turnover or the total income is above 50 lakhs, then definitely he should not be having any such kind of dealings with the organization. And again, one more imposition is that again he should not have, neither he nor his relatives should be holding any position in the organization. So neither this person nor his relatives should be a key manager personnel. Again, in the same condition, they should not be in holding, subsidiary or associate company. Nobody should be there. And he should not have been any employee of the organization, or he should not be any proprietor or partner for 3 financial years. So from this financial year, so from 2021, if you are not associated with the company, either you are not an employee, you are not a partner, or you are not a proprietor, then only this person can be appointed. So we have to see the other preceding 3 financial years, no relation should be there. And then even if we are going to appoint for any firm or the auditors or the company secretaries or the cost auditors, again for the holding subsidiary or associate company, then also no relationship should be existing, or any relationship between the legal or consultancy firms also. Again, same these 3 companies we have to see. There also we should not be having any sort of a relationship. And apart from that, when he wants to become an independent director for the company, at the time, his relatives should not be holding more than 2% of the voting rights. Then also in such cases also, this person cannot become an independent director for the company. And if at all, again, if that person is going to receive any amount that is with respect to 25% or more than the receipts of the company, in the capacity of either promoter, director for the holding or subsidiary company, or if he is going to possess the total voting rights also, then also he will be disqualified. So maximum we have to see to it that there is no material obligation that is existing between this person and the company. So in that case, only one person can be appointed as an independent director. And then if one person is going to meet the criteria of independent director, then he has to fulfill like the basic condition that he is independent. He is not going to be under the influence of any that particular declaration he has to give. And in the first meeting of the board from the financial year only, he has to apply for the status of independent director. And then whatever are the provisions that has been given in the Schedule 4 of the Companies Act, all that the independent director has to fulfill. And if at all he is going to be indulged in any kind of an illegal or any other activity, then he would be liable for the consequences. And as per the act, how much remuneration should be given to this independent director, only that amount he has to take it from the board. And next one is when we are appointing independent director, as per section 152, one person can be there as an independent director for 5 years. And after 5 years, his term will be over. Again, if we want to appoint the same person as an independent director, we have to pass a special resolution. Then only he can be appointed again. And then next one is, if we are appointing one person as an independent director, he cannot hold the office for more than 2 consecutive times. So more than 2 times, again, he shall not be acting in the same capacity. And then lastly, whenever it is an independent director, not lastly, I'll end with this point. So whenever it is an independent director, whatever actions he is going to take, all that should be with respect to the organizational welfare. And if he is going to act opposite to that, then he has to face the legal consequences. So these are a few points related to independent directors. So remaining points we will discuss tomorrow. But today I will stop here. Okay, so I will stop here for today.